Hello and welcome to the Morningstar series, Why Should I Invest With You? I'm Emma Wall and I'm joined today by Andrew Paisley, manager of the Standard Life European Smaller Companies Fund. Hello, Andrew.
Hi.
So lots going on in Europe at the moment.
Yeah.
Of course, we've had the French election, but there are more to come across the continent.
That's right.
With smaller companies, certainly in the UK, they tend to be more domestically focused and therefore more sensitive to what's going on in the economy and what's going on at the macro level with politics.
Yeah.
Is that the same across the channel?
Clearly, there's a large element of the universe that is domestically exposed, but actually the biggest chunk of the small cap universe is the industrial space, and that is very much an export-led part of the economy. So what you get is really global economic exposure, but with all the benefits of better regulation, better accounting standards, and better auditing. So undoubtedly, politics impacts the sentiment, but within small caps, very much a global end market exposure.
And with smaller companies as well, I think there is an idea, as well as they are more domestically focused, whether that's right or not, as you suggest, that they are a little bit more risky. They tend to be a bit more volatile.
Yes, yeah.
Smaller companies perhaps are companies that are newer and therefore perhaps more of them fail or have hiccups in the way that these big international names do not.
Yes. So we actually did some work in-house on this, and undoubtedly small caps are a bit more volatile over the short term. But actually on a risk-adjusted return basis, you're being more than adequately compensated for that additional volatility. So actually the trade-off is really a very good one in the UK and in Europe in particular. I guess the second point is the way that we go about investing in small caps is very much a focus on higher quality companies, high return on equity, and businesses that are not loss-making and are not speculative business models. So we're very much focused on these better quality businesses that we know have delivered over time.
Do you think it's fair to think that smaller companies are younger companies then? Because I think that's why a lot of people think they're riskier, because they've only seen perhaps one market cycle and therefore are less well equipped to deal with any bumps in the road.
So what you see is the whole life cycle of a business. Now, where we are focused are not on the very early stage companies, are these binary outcome companies, biotech companies or oil and gas E&P companies that don't have any production. Those for us are not the right risk reward trade-off. We want companies that are profitable, have turnover, and preferably paying a dividend. So at a slightly later stage of their development, but we know that the risk reward trade-off is more attractive. So really not interested in these sort of binary outcome, extremely high risk small cap investments.
So the next logical question, I suppose, is where are they? Is it a country by country basis, or are there particular sectors at the moment that are really offering those opportunities?
Yeah, so one of the great things about the European small cap universe is roughly about 1,000 companies for me to pick from. So it's a fantastic diversity of interesting companies, some good, but some exceptional, undiscovered gems. Now, the process we have at Standard Life Investments has been in place now for 20 years, been tried and tested through 4 economic cycles, and it's got a great track record, the quant tool that we have, of identifying or helping us identify these great investment opportunities. Now, where we tend to find quite a number of them is in Germany, these German Mittelstand businesses. So companies that are typically set up by the founder, they still have a large shareholding in the business and are still involved with the management of the business. They do one or two things, but they do it exceptionally well. Start off in Germany, then Europe, and then globally. So very much a long-term growth trajectory, and they tend to tick a lot of our process boxes. So it's not because we particularly favourably disposed towards Germany as an economy, but the bottom-up does tend to lead us to some of these great German Mittelstand businesses.
And what about sectors then? Which sectors are lending themselves to this sort of blueprint?
So again, that would be more in the industrial space, but if I can answer the question in a slightly different way, we tend, apart from not investing in loss makers and speculative businesses, tend to find it difficult to find companies within the financial segment of sufficient quality to meet our process. And as a result, we tend to be underweight financials. So, some of the banking stocks, for example, where the reporting accounts are, can be thousands of pages long, fairly dense detail and technical jargon. And actually, by the end of it, you're none the wiser as to what's going on. For us, all we're trying to find are the best 40 to 50 long-term growth companies in the universe. So, we park these to one side and move on to the next idea.
Andrew, thank you very much.
Thank you.
This is Emma Wall for Morningstar. Thank you for watching.